Welcome, Stack Talk listeners. If you're here to really get an edge to understand how the big players make their moves, well, you're definitely in the right place. And hey, if you haven't subscribed yet, please do hit that button now. We're about to dig into some insights that honestly could really shift how you think about value investing. Today, we're doing a deep dive into Mohnish Pabrai's world. The name practically synonymous with deep value, concentrated investing. Our mission here is simple. Unpack his latest portfolio moves from Q2 2025. We want to get into the strategy and maybe more importantly, the conviction behind those decisions. We're working off the latest 13F filing from his fund, Dalal Street LLC. That just came out in August 2025. Now, for anyone maybe newer to this, that 13F, it's a required filing. Big investors like Pabrai, they have to disclose their U.S. stock holdings quarterly. It gives us a peek behind the curtain. Think of this deep dive as your shortcut to seeing what Pabrai is seeing in the market right now, how his actions really mirror his unique investment philosophy. Let's jump in. Okay, so kicking things off, let's look at the headline numbers from that Q2 filing. The total portfolio value for Dalal Street LLC, just over $271.6 million. That's $271,601,546 to be precise. And here's the classic Pabrai touch. That whole amount is invested in just 5 companies. 5.
Yeah, 5 holdings. That immediately jumps out, doesn't it? For a portfolio that size, it just screams concentration. It shows he's sticking to his knitting. That core philosophy hasn't changed, even as the portfolio itself evolves.
It's a real statement, like you said, not chasing diversification.
Exactly. He's clearly targeting a very select few opportunities, places where he feels he has a real edge, or maybe the margin of safety is just, well, too good to pass up.
And speaking of conviction, the big story this quarter has to be offshore drilling, specifically Valaris, VAL. He made a huge move there, added, over 456,000 shares.
That's right, 456,213 shares, a massive increase percentage-wise.
Yeah, nearly 32% more shares. And that pushed Valaris from under 24% of the portfolio up to over 29%. It's almost his biggest holding now.
Almost neck and neck with Warrior Met Coal, yeah.
And Valaris isn't his only bet in that space, right? There's Noble Corp too.
Correct. Noble Corp, ticker NE. That position was unchanged this quarter. Still a significant chunk, though, at about 16.9% of the portfolio.
Okay, so Valaris and Noble together. What does that add up to?
Well, if you combine them, offshore drilling now makes up roughly 36% of his entire portfolio.
Wow, almost half.
Yeah. It's not just dipping a toe in, it's a full-on doubling down on the sector. It signals this really strong belief that these assets, these offshore drilling assets, are seriously undervalued. And maybe more than that, that they're set for a big recovery cycle.
What kind of factors do you think he's looking at there?
Probably several things. The long lead times for new rigs, limiting supply, the age of the current global fleet, maybe an expected pickup in energy demand, making that kind of exploration viable again. He seems to see something structural or maybe cyclical that the broader market might be missing.
But putting nearly half your money in one cyclical sector, especially one as volatile as offshore drilling has been, isn't that incredibly risky by conventional standards?
That's a great question. And it really highlights where Pabrai differs from, let's say, typical fund managers. His tolerance for that kind of volatility is high, but it's always backed by what he sees as a massive margin of safety. He's not just betting on the cycle turning. He's betting on assets he thinks are dirt cheap, maybe below replacement cost even.
So the idea is limited downside, potentially huge upside.
Exactly. He's focused on avoiding permanent loss, not short-term swings. If he thinks these companies can survive the downturn and really thrive later, the volatility is just noise. It's a long game.
A very patient game, it sounds like. Which brings us to the other big piece, metallurgical coal. That's still the foundation, right?
Absolutely. Warrior Met Coal, HCC, is actually still his single largest holding, just over 30%.
Its percentage share dipped a bit, but the number of shares barely changed, 165 shares added, tiny.
Right. The percentage shift is mostly just the Valaris pushing other things down relatively.
And then there's Alpha Metallurgical Resources, AMR. He added more there.
He did. Added about 45,700 shares, which is an 11% increase. So AMR now makes up about 19% of the portfolio.
Okay, so between Warrior Met Coal and Alpha Met Resources,
you're looking at almost 50% of the portfolio right there, just about neck and neck with the offshore drilling allocation.
So it's really those two core areas, met coal and offshore drilling.
Precisely. It shows metallurgical coal is absolutely still a core focus. It's not just energy. It's about steel production. That specific type of coal is essential. He clearly believes in the long-term need for it and probably in the quality of these specific companies, their management, their operations. He's not just buying a commodity.
Okay, so we have these two massive pillars, almost the entire portfolio. But then there's something completely new this quarter.
Well, yes, the interesting addition.
He bought into AutoNation, AAN.
Okay.
That's automotive retail. A totally new sector for him, isn't it?
It is a definite diversification move, relatively speaking.
It's his fifth holding now. Makes up about 4.5% of the portfolio. 61,000 shares, worth around $12.1 million. And AutoNation, that's the biggest car retailer in the U.S.
Oh. Yeah, it's fascinating because it is new territory for him. It's a significant position, over $12 million, but still measured compared to the big two sectors.
What do you think the angle is there? What's the value proposition he might be seeing?
Well, he could be looking at industry consolidation. AutoNation is the biggest player, maybe positioned to keep buying up smaller dealerships, gain efficiencies, that kind of thing.
Economies of scale.
Potentially. Or maybe he just sees a really solid balance sheet, good cash flow, maybe thinks the market is too focused on short-term car sales cycles and missing the value in the service and parts side of the business, or the real estate assets.
It definitely makes you wonder what other seemingly boring industries might have hidden value.
It does, doesn't it?
Yeah.
Where else is consolidation happening, or where are operational improvements being overlooked? Good questions for any value investor.
And even with this new addition, Pabrai is still Pabrai. The concentration is still extreme.
Oh, absolutely.
He went from 4 stocks to 5, but the top 4 still make up over 95% of the portfolio value.
That's right. It underscores the high conviction approach.
And interestingly, it looks like this AutoNation purchase was funded by portfolio growth, not by selling down the big positions, because he actually added shares in Valaris and AMR.
Exactly. It suggests he's still very bullish on his existing core holdings while finding this new specific opportunity that meets his strict criteria. It's so different from typical diversification, isn't it?
Yeah.
Where you spread bets thinly. Pabrai goes deep. He believes deep understanding of a few reduces risk more than knowing a little about many.
That really takes discipline. What do you think is the biggest psychological challenge for someone trying to invest like that, with such concentration?
I think you hit on it earlier, really. It's the fear of being wrong magnified. When you have so much in one or two baskets, if one goes sour, it hurts more than if it was just 2% of your portfolio.
Right. You need immense conviction in your research and patience, lots of patience.
And the ability to stomach that volatility we talked about. Knowing that the market might disagree with you, sometimes strongly for a long time before, or if your thesis plays out.
Okay, so let's try and synthesize this. Looking at Pabrai's Q2 moves, we see this evolution, maybe, but still very consistent with his core ideas.
Definitely an evolution within a consistent framework.
We've got the big ramp up in offshore drilling via Valaris, the continued unwavering bet on Metpol with Warrior and Alpha, and then this opportunistic measured step into auto retail with AutoNation.
3 distinct sectors now: met coal, offshore services, auto retail.
So what's the big takeaway for listeners? What does this all signal?
I think that so what is really in that Valaris move? Pouring significant new capital there, that's a huge signal. It strongly suggests he believes offshore drilling is still one of the best value plays out there right now. Overall, the whole structure seems designed to capture potentially massive upside if or when these cyclical industries turn and when the market finally sees the value he sees.
It really makes you consider the kind of conviction needed for cyclical investing, doesn't it?
It does. And the long-term perspective required. It's certainly not a strategy for everyone, but the potential payoff for that kind of focused patience can be enormous.
Well, that wraps up our deep dive for today. We've looked closely at Mohnish Pabrai's Q2 2025 portfolio, the big offshore bet, the solid coal foundation, and the new auto retail slice. It's a real-world example of high-conviction value investing in action.
So maybe the thought to leave you with is this. Reflecting on Pabrai's moves, what strong beliefs do you hold about sectors the market might be overlooking right now? Or, perhaps, what can his example teach us all about the power of patience and real conviction in today's often short-sighted market?
Great questions to ponder. Thanks for joining us on the deep dive. We really hope this look into Pabrai's thinking has been valuable, and please make sure you're subscribed to Stock Talk for more insights and market analysis like this. We'll catch you next time.